According to this week's guest expert, Ben Hunt, Chief Investment Officer of Second Foundation Partners, when it comes to successfully managing your wealth, there's really only one question you need to get right. Are we entering an inflationary future or a deflationary one? And according to Ben, an important transition away from deflation and towards inflation is going on. What will the implications be? Keep watching this video to find out. And as usual, please take a second and click on the like button below to help us continue the run of amazing guest experts we've had on this program. The more likes these videos get, the more big names we're able to attract. And now, let's get started watching this week's market update featuring fund manager Ben Hunt. Hi folks, co-founder of Peak Prosperity, Adam Taggart here, welcoming you back for another week of trying to make sense of these markets. And we have an amazing guest with us today. We have Ben Hunt, who is the co-founder and chief investment officer of Second Foundation Partners. He's also the editor of the widely respected Epsilon Theory newsletter, which is read by over 100,000 professional investors and money allocators across 180 countries. Before co-founding Second Foundation, Ben was an academic professor, a published book author, the founder of 2 technology companies, a venture capitalist, and a portfolio manager. So as you can see, his experience and expertise set is vast. He's been in the ivory tower, he's been in the startup world, he's been on Wall Street. We're incredibly lucky to have a man of his Renaissance perspective. Ben, thank you so much for joining us today.
It's great to be here, Adam. I can't keep a job. That's the issue here.
Yeah, sort of in the same way that like Da Vinci or Michelangelo could.
No. I mean, look, and I think Adam, you're the same way. I mean, if you've got that entrepreneurial bug, I mean, it really is a bug. It's not a feature. you can't help yourself but to find new ideas that you want to pursue in a business way, and so that's certainly been true for me, and I bet it is for you and a lot of your listeners as well.
Well, you're very kind, and you're right. Our listeners are certainly a motley crew of very, people of all different types of backgrounds and expertise. But what's interesting, and I think this is why you're such a great guest for us, Ben, sort of a universal thread through all of them is that they are curious-minded. These are people who want to understand the world better, and they're usually coming to our website or watching these videos because they want to educate themselves. They want to make themselves smarter and more aware. So having a big thinker like you is just a huge treat, both for me and for the audience here. So let's jump right into it. Right before I do, we're also joined, as we are every week, by the lead partners of New Harbor Financial. That's the financial advisory firm officially endorsed by Peak Prosperity. So we're joined this week as always by John Lodra and Mike Preston. John, Mike, great to have you guys here. And if you decide you got a question for Mike, for Ben, just let me know and I'll let you guys go ahead.
Hey Adam,
good, Adam.
Hey Ben, how you doing? Good to be with you both.
Doing great. Nice to be with you here, John and Mike.
All right, and as I try to always do at the beginning of these interviews with our guests, I try not to inject any of my personal bias at the beginning of the discussion. So Ben, if you don't mind, let me just ask you this question. What is your opinion of today's economy and the state of the financial markets?
Well, look, in a nutshell, I think the real world economy is crappy and getting worse, and I think the financial markets, the market economy is doing just fine. Thank you very much. I think that I keep asking myself when I'll be able to say that this gulf, this canyon, this massive gap between real world and market world will start to narrow or shrink. But the fact is, every week, every month, every year, it just seems to widen still farther. In the research that we do at Second Foundation Partners, we're really focused on what we call the narrative, the media messages that we're inundated with, that we're immersed in, both from financial media, from political media. We really think that it's this narrative that fills the gap between real world and market world. And so what we've really seen happening, and this has been a process that's been going on for 11 years now, is that we really do believe that capital markets, particularly public markets, are being transformed into a political utility, meaning that the policies that we see coming out of Washington and in all of its manifestations. And this is not a Republican thing. This is not a Democrat thing. This is a power thing. This is a government thing. The policies are being implemented to create that gap, that gulf between the real world, the real economy, and the market world and market economy, because it's so important. I think we can all agree, for political stability to have this financial market that continues to be at the highs. I think what Trump said, it's like he often does. He says the quiet part out loud, right? But when he said that the stock market is his report card, I think that would have been the same sentiment from lots of presidents. But now we're seeing more and more policies, again, 11 years worth of policies, so that the stock market, public markets can be propped up, even as the real world economy, I think, has got, it's never been tougher for real world people.
Yeah, that's absolutely true. Some great comments to dig into there, Ben. One of which being is how sustainable is this, right? How long can they continue to sort of create this dichotomy where they're able to, sort of manage the stock market to, or the financial markets to wherever they want it to be? Is that something they literally could do forever, or are there some limits to that might come to bite everybody in the end here?
I'd love to say that it's not forever. I'd love to say that trees can't grow to the sky forever. That said, what we have today, and again, this is really not a left-right thing. This is when you have control over a printing press, the money printer goes burr, right? And you've got that, and you have even what I describe as control of the narrative, meaning that when I'll use the example of what's been at the forefront of financial markets for the last 3 weeks, this on again, off again saga of fiscal stimulus, right? Will it be 1.8 trillion? Will it be 2.2 trillion? Will it be only 1.5 trillion if those evil Senate Republicans get their way? This is the conversation that's being had, and look, I get it. I mean, it is the real economy, as I said, is awful for a lot of real people today, and it makes a lot of sense to me that when you're in the midst of a public health crisis, the likes of which we haven't seen in a century, this is why government exists, right? And for kind of the libertarian in me says it's pretty much the only reason that government exists is for defending people against a threat from war, but also against a threat from a disease like this. So I get it, and I'm not averse to the government stepping in with real monetary support for real people. At the same time, though, we have a $3 trillion deficit this year. The deficit next year, no matter who's elected, is going to be at least $3 trillion. That tether, that link between taxes and spending has been, I think, irrevocably cut, which means that taxes now become an instrument for justice, and that should scare the crap out of anyone who's listening to this show. And spending becomes completely untethered. Now, how long can that go on? To your question, it can go on so long as people believe the story. And I think that goes on for as long as inflation doesn't come rearing back. That can go on for a really long time. The absence of inflation coming rearing back in a way that makes everybody go, oh my God, we have to do something different. When you have a central bank that can, as they've been doing in Japan for a long time, buy buy all the debt so that the longer term interest rates don't react. They don't go so high as to create a real backlash against the inflation that happens. I mean, inflation can be great if it's just, oh, the price of your house is going up. Anyway, that's a long-winded question, and it's just a long-winded answer, rather, to a pretty simple question. The fact is, I believe it can go on for as long as government, what we call in game theory missionaries, so long as they control the narrative and they say, this is all good for you.
All right. And that obviously opens up some interesting questions about, what could have that narrative get away from them.
Mm-hmm.
And, we're seeing an increasing amount of social unrest in the country. And, maybe that's a factor that could do this if too many people get too angry about this, because your comments make me sort of think about that old quote. And I think it's sometimes attributed to Jefferson, but I don't really know if that's true or just apocryphal, but where, they basically said that the democracy will continue in America up until the point at which the masses realize they can vote themselves the treasury, and then they bankrupt the country as a result. It's almost sort of like maybe we are entering that phase. The challenge, I think, or the problem is it's not just going to the democracy. Most of the benefits of all of this stimulus and printing is really going to the folks controlling the system here. So exactly. Yeah, maybe they're keeping people at bay right now by saying, yes, you're going to get another check in the mail. There's some other little scraps we'll throw to you. But really the benefits of this are attributing to, big corporations, the very, very rich. And, as you said, the actual real economy is doing very poorly. So there's a ton of people that are dealing with job loss. Hey, how am I going to put food on the table, next week type of concerns. And so do you see that could actually be something that eventually wrests control of the narrative from the government folks who are making these policy decisions?
Well, I don't. And the reason I say that is that under our current system, you can get political entrepreneurs on either the left or the right to so I think the easy alternative to the kind of, oligarchic, I'll use that word, capture of the goodies that come out of this economy that we've seen over the last, frankly, 30 years, but have really accelerated over the last 10 years. Does that get captured by the lunacies of the Bernie and AOC wing? It could. But I don't want to wish that on anyone either, right? I think what has to happen for, I think, the sort of change that I know you guys write about and I certainly write about. My hope, my real hope, is that 2020, there have been a couple of, as you say, car alarms that have gone off here in 2020. COVID obviously being one. The need, I think the fairly desperate need for changes in policing, not defunding and not disbanding, but real significant changes in policing around social justice. I think that is a pressing need in this country. And I think that's been another car alarm that's gone off for a lot of people. I think this election has been a car alarm that's gone off and woken a lot of people up from what I suspect has been, a couple of decades of kind of being asleep. My real hope is that whatever comes out of the election on November 3rd, that people recognize that this world they've been woken up into, it doesn't just magically get better one way or another on November 4th. And so the election, it's an event. It's going to have repercussions and markets and everything else. I get that, and it's an important event. It's important to vote, right? It's even more important to remain politically active in the weeks, months, years, and decades following November 4th. So my hope, and maybe it's a hope against experience, is that enough people have been woken up by one of these car alarms that's gone off in 2020 so that we can remain politically active beyond the election and make the sort of, I think, very fundamental changes that need to be made, whether it's in a two-party system, whether it's in our financial system, all of that, to make those sort of fundamental changes that can lead to change that's good for all of us, right? That's not just going back and forth between the, the Trump clown show or the, Bernie socialist clown show. That my fear is that we just go back and forth between that pillar and post without making the real changes that I think can bring us back to the middle. But if anything could kind of wake us up to bring us back to the middle, it's going to be these events of 2020.
Yeah. All right. Well, look, first I'll say hallelujah to your recommendations about us all being, active and supporting and driving for the type of change that we want to see. But I think most people watching this, and I myself would say, but don't hold your breath waiting for it, right? In other words,
Look, it's going to come from the bottom up, right? It's going to come from each of us being active to help our neighbors, to help our communities, to start bottom up efforts, and not giving our hearts and our souls to one of these, to a political party. I really think that a lot of people's eyes have been open to both parties through 2020, and I really hope that clear eyes and full hearts. I hope that attitude persists beyond the election.
Great. Well, me too. And your message is very timely because we're having our annual seminar this weekend, and it's all about building resilience, and it's all about exactly what you're talking about, which is getting individuals to take action, and hopefully collectively we do a bottoms-up transformation. But on the way there, to your earlier point, whomever wins in November is inheriting, a huge amount of structural problems. Across a wide amount of the spectrum, but here in this program we're looking, sort of with the economic and financial lens. So I guess my question for you is, looking forward, what do you see in in your crystal ball for the next couple of years? You mentioned, that hey, basically everybody running the system is trying to support the current price structure and continue it. So do you see that we're going to be, kind of full tilt ahead on the liquidity factor, the stimulus factor, and we're just going to see years of absolutely. Okay, so then I'm going to ask.
No matter who's elected, right? We're going to have a $4 trillion stimulus package going into 2021. I mean, if Trump's reelected, he'll call it his MAGA infrastructure plan, and if Biden's elected, it'll be his green build back better, or whatever the hell this slogan is. It'll be the no malarkey, right? But in either event, they're both going to spend $4 trillion, and so when you're talking about markets, what comes out of that, and that's what you've clearly seen in markets so far in October, is that the 10-year rate has backed up a little bit. I mean, only 20 basis points from the lows, but when you're at 65 basis points going to 85 basis points, 20 basis points is a big move.
Right.
Right. You're seeing these early stage cyclicals do extremely well in the market this year, a real rally in those cyclicals. These are the stocks, these are the things that rally when people think, hey, it's Katie bar the door for massive government spending on anything and everything. So that is what I think the market is telling you, at least so far in October, even as COVID, globally is, exploding to a new height or depths, I guess would be more accurate. But despite, again, what's happening in the real world, what market world is telling you is that there's going to be massive spending, unlimited support to keep interest rates artificially low forever and ever, amen. And in that environment, you when the music's playing, you got to dance. That's what's the market telling you. And I'm hard pressed to tell you anything different from that either.
All right, and that's where I'm going on this, because we have a ton of people watching here that are really agonizing with, I hate being long this market, right? Because
Sure.
I'm looking at the real economy. I'm seeing that all the things that you place valuation, analysis and metrics on,
Useless.
the
Can't do it.
prices, completely don't reflect reality. And so they're having the individual equivalent of what you wrote about recently in your piece called the frustrated money manager. And I'm sure the guys at New Harbor might want to chime in on this at some point. But basically where, your piece, as I read it, said, look, if the future direction for sort of all financial assets is just up, then what's a financial advisor really doing? I mean, shouldn't everybody just sort of buy the index and just ride it, right? What type of work is the financial advisor doing to differentiate and earn the fee that they're charging you? Now we got a lot of people that are very worried about somehow the market, getting away, at least even briefly, from the hands of those controlling it, and then just having some massive deflationary event. And so they don't want to go long this market against their better judgment and then lose everything in a correction. So with all that background, what would you say to people who are wrestling with that?
Well, first of all, I'd say that when that phrase, the frustrated money manager, it's not talking about professional money managers like John and Mike. The expression frustrated money manager is what we, and I know John and Mike, you see this so often in your field. It's it's the sales guy at Bank of America or something like that. It's the person who's not actually a money manager, but is quite certain that he could do a much better job than you guys could do, right? Because he's saying it's like Davy Day Trader, saying, oh well, stocks only go up, so we'll pile into this or pile into that. And the point of the article was that, one of the points of the article was that frankly, I think it's more important than ever to have a professional fiduciary looking out with you for your monetary interest. I really do believe that. I think it's never been more important, because it's exactly at this stage where it's so easy, if you're not immersed in it, and if you're not seeing I'll call it again, that gap between real world and market world, it's easy to kind of take these narratives and what you're being told by CNBC 24 hours a day, or by the Davy Day Trader and that crew. It's really easy to take that into your heart. And what I mean by that is, I'm not saying to fight the Fed. I'm not saying, oh no, we got to run for the hills, and whatever you do, don't get involved in this market. What I'm saying is, you need to have an appropriate distance. You need to realize that you're being told a story. You need to realize that you're sitting down at this game of poker, and the goal here is not to be the sucker at the table, right? And I think it's never been more important to have a professional fiduciary money manager to help you keep your distance, your intellectual distance, your emotional distance from the stories that you're being told. So look, I think the principle, at least as I've tried to describe it, when you're in these impossible situations as a money manager, because you know what the reality is, and you know that this game can go on for a really long time, and you need to be in the game. It's, again, to use a poker expression, it's the only game in town for a lot of investors, for a lot of the things we do. And I think the principle that is really helpful in these circumstances is what's called mini-max regret, meaning you need to minimize your maximum regret. For some people, that maximum regret will be, frankly, not participating when the market is going up. Look, they need to participate. They need to take this market risk, and losing out, that would be their maximum regret. And so you say, okay, well, let's minimize that. Let's, we'll be alert, we'll be aware, but we're gonna dance while the music's playing. For other people, their maximum regret will be, look, I've worked a lifetime, I'm doing okay. I don't need to make that extra, right? I just need to stay wealthy, right? Not become wealthy. And for them, that regret means, well, all right, we're going to talk about a different allocation and way of participating here. So I think it's professional market managers who have seen these ups and downs, who are both scratching their heads at this like we all are, but are aware that we got to play the hand we're dealt. I frankly think it's more important to have that sort of professional advice than ever.
All right, great. And I'm sure Mike and John are going to have some
I'm sure Mike and John are happy to hear that. Right?
things to build on it. Yeah, and it was actually a great commercial for working with a financial advisor like them, because one of the things that we've talked about with New Harbor on the program many times before is those guys really have a focus on risk management. And I'm guessing, I don't put words in your mouth, so take them out if they don't fit. But I sort of hear what you're saying, and it says like, yeah, now is a really great time to, if you're going to be along this market, work with somebody that knows how to manage risk, so that if indeed the market starts having some dislocations, you're not completely exposed to that.
Well, absolutely. We always tend to think of risk as being always on the downside, but there's risk on the other side too, right? I mean, when we talk about market risk, we have to decide, we're going to take the good with the bad, or do we have our kind of finger on the pulse of what is driving this market, because it ain't fundamentals. I think that if we're kind of aware of, look, the track seems well greased for a ton of government spending, inflationary pressures, right? Does that lead to kind of your typical, I'm going to reduce risk in my portfolio by having really long dated, treasuries? I don't know, right? I mean, there are lots of, I'll call it scenarios and regimes that can happen, particularly in an inflationary environment, which no professional investor I know has lived and worked in an inflationary environment. I mean, we've had a good 40 years now of deflationary environments. So, it's having that sort of flexibility for understanding the different ways that risk can bite you, because it's not just in, the price of XYZ went down. That's what I think we're going to have to navigate in terms of thinking about risk going into next year.
All right, very well said. And I'm really glad you mentioned the potential for higher inflation coming forward, because that's actually a refrain I'm beginning to hear a lot more now. I think, as you said, 2020 sort of changed the game in many ways, and there's been a number of, I think, quite well-respected long-term deflationists who are now beginning to say that they are moving over into the inflation camp for a lot of the reasons that you just mentioned. So I guess as we sort of wind down here, do you see the probability of inflation being higher going forward than it was, say, a few years ago? And B, you talked about how there are so few people, particularly in the money management business, left that have had any experience in their career dealing with an inflationary environment, a secular inflationary environment.
So to your first answer, absolutely, right? So when you think about kind of, I'll use the example of the four horsemen of the apocalypse, right? Most of them are deflationary shocks, and we've certainly seen a lot of those. The most recent one being plague is a very deflationary shock. But inflation is the fourth horseman, right? Inflation is let me put it this way. To manage your family's wealth, your company's wealth, whatever we're talking about in terms of managing assets and wealth, my strong belief is there's only one question that you have to get roughly right. And that is, are we in an inflationary world or a deflationary world? You don't have to time it to the week or the month, quarter, but you got to get that question roughly right. Because the playbook, you can, if you get the question roughly right, you can make a lot of mistakes, and you can occasionally zig when you should have zagged, and it's all going to turn out fine. But if you get that basic question wrong, the playbooks are so different for the deflationary world and for the inflationary world that That's the one thing you got to get right.
All right.
So get that right and you'll be in good shape.
That I think is a critical insight. And so as we wind down here, Ben, because I know we've already taken a ton of your time, looking through our lenses, if we do think that we now are transitioning from a deflationary world to an inflationary world, what types of investment, asset classes or sectors, or just what type of investment areas would be good for, the curious-minded investor to explore and consider, preparing for that type of environment?
You bet. So in what you'll see, and you're seeing this already happening this month, you'll see the sell side, the banks start talking about early cyclicals. So they'll talk about that being what you want, how you want to play, and they really mean play this kind of this period in the business cycle. What I'd recommend is to kind of step back a second, and whenever you're talking about these transition points or acceleration points, how they say in real estate or commercial real estate, the three most important things are, location, 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 right? When you have these sort of transition points from either deflation to inflation, or for inflation to accelerate, deflation to accelerate, any of these transition points, it's when you think about companies and you're thinking about assets or where to put your money, it's pricing power, pricing power, pricing power. Which companies have pricing power? Which assets will hold their purchasing power, right? If we're thinking about that, which cash flows can maintain their pricing power. Think with that lens when you're thinking about companies or you're thinking about assets, and that'll serve you really well. Those will be the winners, and the companies or the assets that don't have pricing and purchasing power, they're going to be the losers. So that's my strong advice for how to think about these sort of turning points.
All right, that I think is definitely one of the gems that we aim to give our viewers in these videos, Ben. So thank you for sharing that here with us. It's a framework for which to look at how to invest going forward, and one that indeed, should we be going into inflation that seems really increasingly pretty probable at this point, or likely, or even obvious. It's a very, very useful tool that you just gave our viewers here to look through as they're looking towards their investment portfolio's future. So with that said, Ben, we're going to let you go. Two last questions. John, I'll let you, I know you've got one for him. And then after John finishes, Ben, if you could just let the viewers know if they want to learn more about you and your work, follow you, where should they go? So John, what was your question there?
Yeah, Ben, I'd be remiss if we didn't ask you about your work with the Frontline Heroes. I know.
Oh, thank you, John.
Quite active in that, and when things in your neck of the woods and our neck of the woods here in the Northeast were in kind of crisis mode back in March, April. I know you were real busy with that. Could you tell us about that and where that stands right now?
Sure, happy to, John. Thanks for asking. I was describing earlier when Adam was asking kind of what happens after all this, and my hope was that we can act from a bottom-up way to really do things to help our community and our country. And the opportunity that myself and family and partners and friends saw back in March was that there was a real need for PPE, personal protective equipment, for our frontline heroes, right? For doctors, nurses, EMTs, firemen, policemen, the people who are dealing with this COVID crisis and need that sort of armor, and weren't getting it, frankly. And our goal was, look, we're not going to compete with the federal government or these state emergency groups, right? To buy 1 million masks from China or something like that, but we also weren't going to wait. We aren't going to wait. So we started what we like to call an underground railroad of PPE supply, where we found 30 people. They were employees of Intel and living in China, to buy personally packages of really high quality PPE that we could get tested over here, the N95 masks, and ship it over here, not in quantities of 1 million masks, but 1,000 masks in a FedEx box, right? And we got this underground railroad going, where we were getting a good supply, and then we reached out to ask for individual doctors and nurses and EMTs to let us know, do you need masks? And it was just been so life affirming to me, because we raised over $1 million from this, just small donations from people wanting to help out. And to date, we've distributed over 170,000 N95 masks to over 1,300 individual clinics and hospitals and fire departments and EMTs and prisons and police departments in 49 states out of the United States. And we're sending it directly to the people who are in need, and then they distribute it, to their team. So this is exactly what I mean about a bottom-up effort, that there are opportunities for all of us to do this. And this is what gives me such great hope that even though don't get me started on our politicians of both parties and everything that's happening top down, there is such strength and heart in the American people to help our neighbor and to help our fellow citizens. I really think we got this, and that's what gives me real hope for the future, no matter what happens in Washington. So Adam, you ask, how can people read more about this? It's Epsilon Theory all over the place. So it's epsilontheory.com. It's at Epsilon Theory on Twitter. And thanks so much for having me, Adam. It's a pleasure to be here, and love to come back anytime.
Well, it's such a joy, Ben. Thanks so much. I'm looking at my question list here, and I think I got almost halfway through the questions I wanted to ask you. So we would love to have you back on again at some point to tackle those and more going forward. I just want to thank you, A, for coming on, but for sharing your wisdom, but also for your wonderful work. You're a man with a big mind, which we made very clear at the beginning, but clearly you're a man with a big heart. And you're also, and this goes to your entrepreneurial expertise, you're a man that can take ideas and bring them into real actions. And Frontline Heroes is just a great example of all three of those. So thank you for the difference that you make in the world. Thank you for sharing yourself with the Peak Prosperity community. One of the things we didn't get a chance to really dive into, but I know that you are really in on the whole resilience message and movement. And I know that in your life, you're a beekeeper, correct? Am I correct in that?
Yes, no. We live out in the woods, and we've got bees and sheep and goats and chickens and horses and.
Yeah, so you're living the Peak Prosperity Resilience lifestyle, and I'd love to explore that further with you when we have you on again. But I did want to make it clear to folks that you're not a guy that just sort of lives up in the thoughts of big finance. You're a guy who's actually going out in the back,
drive a tractor,
carrying your bees and feeding your pigs. Yeah, exactly. All right. Well, look, Ben, thank you so much, and again, we'd love to have you on again. And congrats on all your amazing work.
Thanks, everyone. Thanks for the kind words.
Thanks a lot, Ben. Appreciate Good to see you.
Bye-bye.
Hi, Ben.
All right. Well, John and Mike, yet another amazing guest, and Ben Hunt. Just such a quality, good guy, and anybody who just watched the video up to here can understand that better than in any way I can say it. But super glad that he was able to join us. John, thank you for asking the question about Frontline Heroes. That really helped show that whole side of Ben that I hadn't really gotten out in the interview prior to that. So thank you. I'll be really honest with you guys, because we're shifting over now to talk about what the markets have done since last week. I have not paid very close attention to the markets because I've been so laser focused on getting the upcoming Peak Prosperity seminar produced. And just as a reminder, it's going to be this weekend, October 24th, 25th. If you're watching this video after the seminar, don't worry about it. You can actually go and get replay videos of the entire event. I'm putting up a URL here. If you're watching this before Saturday, the 24th, you can still register, but if not, you can go to that same URL and you can purchase access to the replay videos if you want to. It is going to be amazing, but I've talked about that in weeks past, so I won't reiterate it here. All right, guys, Mike, why don't we start with you in terms of what the market's been up to. From the little I've been able to see in my quick peeks during the week, it does seem that we maybe have, for at least briefly, put an end to the just unstoppable 45% or 45-degree ramps that we've been seeing for the past several weeks. There does seem to be some more volatility in the markets. Last day or so, I think, have been, somewhat down days for the market. And again, as Ben said, I think it's all because of stimulus rumors, on, off, et cetera. But what have you seen as you've been looking at the markets over the past week?
Adam, it's not really that much different than it's been. I mean, you haven't missed much by tuning out, I'll tell you that. I mean, the market is down maybe 20 points on the week. Obviously, the week is not over because today is Thursday evening. We still have Friday's trading. But, we're sitting here just hovering below the all-time highs, honestly. The market tries to pull back. It did in early September. It immediately went right back to test the highs. All of the things we talk about every week are still true in terms of the one-sided sentiment. The investors' intelligence readings are right at all-time highs, or right near multi-year highs, maybe not all-time highs. Investors' intelligence is at 60% bulls right now, which is just about 1% lower than it was in September 1st and 2nd of this year, and then before that in February. Other things like the put-call ratio, which measures lopsided bullishness, are again near all-time lows on the 10-day, average smooth valuations. So, it's nothing new with this market, though. It's like just overheated figures. Over bullish sentiment just goes on and on and on and on. Now for many, many years, and it's all about game theory, and it's all about what not only the Fed is going to do, but now what about the stimulus? It's last year it was China deal this, China deal that. Now it's stimulus. Every headline stimulus. And algos are buying that and selling it in both directions. So the market's really whippy, but it's still just sitting here right under the all-time high. We wouldn't have thought it would be that way going into the election, but it is. And for what it's worth, we don't really think it matters who gets elected. Either way, the tsunami, if you will, of money printing is not going to stop. It's only going to accelerate probably from here. So I know it's a boring story, but we as money managers, as Ben said a little while ago, don't really have an enviable job in the present environment, but we as money managers continue to be prudent and net 0% invested overall in the broad stock market and waiting for better opportunities. So that's where we're at right now.
All right. Well, speaking about what Ben said, I really did appreciate his emphasis on that, you can sort of read the story one way and say, hey, I just need to buy the index and let it ride, right? That's the Davy day trader approach, right? I'm going to literally, take some Scrabble letters in a bag and pull them out, and whatever ticker they spell, I'll go buy that, right? It doesn't matter if all boats are rising. I think what Ben said is, look, we're entering an inflationary environment, but that doesn't mean that stocks necessarily are going to go up every day, in that type of environment. In fact, there's lots of reasons why we could have growing inflation, but trouble in the stock market. And given the heights at which things have been inflated to, those downdrafts could be incredibly punishing. So, what I heard from Ben was, that's why you definitely want to be working with a professional financial advisor to help you create, both a prudent portfolio for the right risks, and then also to be able to be there to, not only put the defenses in play beforehand, but to be able to react as depending on whatever the market is doing. So, John, I want to punt to you here for a second. Ben and I talked really briefly about, I think sort of the general sentiment that we're going to have a higher and more inflationary future than we've had in the past, and maybe that folks were planning for pre-2020. I know you and I have talked really briefly about this. I know you guys are going to go into more depth on this in the seminar this coming weekend. But is that impacting or influencing the way in which you guys are looking at the New Harbor portfolio and maybe thinking about allocating capital going forward?
Yeah, not really. I guess a couple of key points is at any given point, frankly, throughout our management of clients through any part of the market cycle, we emphasize liquidity, the ability to move quickly, the ability to move in and out of things. So we stand ready at all times to respond to different things. Inflation of itself, the hard part of using broad slogans like inflationary environment or deflationary environment, it misses a lot of context. So as I've talked about before, stocks aren't necessarily a good, broadly speaking. I think Ben made some very good points about companies that have pricing power can be okay and actually do quite well in an inflationary environment. But broadly speaking, the stock market, which most people are broadly exposed to the S&P 500 or the broad stock market, broadly speaking, the stock market does not do well when we get a first impulse of inflation, especially when that stock market is priced at such rich, egregiously high valuations as it is now. In fact, it's only after stocks kind of reprice to more reasonable, fundamentally justified levels that they become a durable and really good inflation hedge. So it's very important not to miss out on that nuance or that context. I wanted to quickly comment about Ben's parable, if I could, about the frustrated money manager. I think he basically said, it's important to take a step back and look at the story that was being told and really reconcile that against reality or whatever. That's what Mike and I and we here at New Harbor do all the time. We start with the data, and when you look at the data, you can kind of see what this story is and what it's not, or what we're being told versus what history says anyways is probably closer to reality. And that, we think, is an essential part of our role with clients. If we can't educate our clients about the reality versus the story, they can't, with our help, really properly evaluate that mini-max function that Ben talked to. What is more painful for you, missing out on speculative late-stage advances, or not even being aware of that's the current environment and suffering a 50 or 60% decline that can absolutely derail a financially secure situation that you might already have. So we're not so much here to force clients into any kind of allocation, but instead illuminate for them, we think, what the data says and how that maybe challenges the story that's being told by the folks on Bubble Vision every day at CNBC. It's only with that, I think, understanding that we and more importantly our clients can properly evaluate kind of what this means to their financial picture. We're not going to, in our seats, be sanguine about this absolutely egregious bubble that's been created, because there's real lives at stake here, and we've got many clients who have worked hard to create some sense of financial security, and not at our watch will that be undone by just simply buying into the narrative. We at least want to educate them to how that narrative is absolutely at odds with any kind of historical foundation for taking on a lot of risk right here now.
Great. And of course, that's going to be the main theme of the seminar this coming weekend, where we've got over 20 of the best minds that we know of coming together to talk about, what's most likely to be happening down the road. What are some of the biggest trends that are, building now in 2020 that are going to drive the future most going forward. And then, of course, what to do about all of these. And very excited that, as always, you guys are going to be there as well. We're going to have you in a couple different panels, letting folks ask any questions they want directly of you guys. And I know that you're also giving private consultations to dozens and dozens of people during that weekend. So should be great. It's always a great time seeing you guys this year. It's going to be a little strange doing it virtually, but actually, I think it's actually going to come out surprisingly well and fun for folks, both for us, the participants, and folks watching. All right, so guys, with that being said, I will let you guys have the last word here. Anything about the markets, your guys' view of the world, or anything that we haven't covered yet that you think is worth talking about before we sign off?
Adam, it's sometimes it's the monotony that you just got to take a step back and not make too much of it. We're the big picture really hasn't moved much. We've got an election coming around the corner, which probably will create some fireworks, but the big picture is the stage is set. Already in terms of markets being at crazy valuations, economic headwinds being very much there, and we are seeing turn-ups in the coronavirus again. These are all things that haven't gone away. They've just kind of been snoozed either in people's psyche or certainly in the media. No, I don't think there's much more we really can say about the environment.
All right, Mike, I see you shaking your head as well. Okay, so whatever happens, we will be here to talk about it for our viewers week after week going forward. So we'll see everybody here again next week. Real quick, as we wrap up here, a couple quick housekeeping notes as always. If you want to find out who our future guests are, be sure to follow me on Twitter. That's @MenloBear. Our next guest is a very big name in the space. I think folks are going to be very excited to find out who we've just landed. I also have been able to land somebody to come make the bull case, at least the bull case for technology stocks going forward. This is much more sort of a traditional bullish fund manager that I've been able to finally get to agree to come on the program. So that's exciting news too, because I know a lot of you have been asking for that. Very quickly, if you haven't yet, please just take a second and like the video. The likes actually do matter in terms of how often these videos get shared, and that then in turn helps us get even bigger names to come on the program. And lastly, if whether you're hearing it from me, whether you're hearing it from Ben Hunt, whether you're hearing it when you hear John and Mike answer, if you would like to be able to talk and get the feedback of a professional financial advisor that understands the risks that are in play here and get their custom advice for you on your portfolio, stick around to the end of the video here. We'll tell you how you can do just that with John and Mike and the good folks at New Harbor Financial. And with that, John and Mike, I will see you guys this weekend.
See you soon, Adam. Look forward to it. Thank you.
All right, thanks, Adam. We'll see you soon. Have a good one.
If you'd like to schedule a consultation with the financial advisors at New Harbor Financial, simply go to greylockpeak.com. These consultations are completely free and there are no strings attached. The good folks at New Harbor will simply answer any questions you have about your investment goals or your portfolio and give you their best advice given the latest market outlook. They're willing to do this because they care about protecting people's wealth and because Peak Prosperity has connected them with so many thoughtful investors just like you over the past decade. Chris and I started doing this because so many people have approached us in frustration and are looking for a solution because they're feeling out of alignment or just downright ridiculed by the standard sort of financial advisors who have been managing their money. You know the type, the kind that just pushes all of your money into the market, scoffs at the idea of owning gold, and when you bring up concerns about the market's sky-high valuations, they say, don't worry, the market's always going to take care of you. For many of the reasons discussed in today's video, we think this is one of the most challenging and treacherous times in history for investing, which is why we strongly believe that today's investors are best served working in partnership with a conscientious professional advisor who understands the risks in play. Now, we're agnostic which professional advisor you work with, just as long as they're good. If you're already working with one, that's fantastic. Stick with them. But if you aren't, or you're having trouble finding one you respect or trust, then consider talking to John and Mike and the team at New Harbor. And for those about to ask, yes, there's a business relationship between Peak Prosperity and New Harbor, which we had to put in place to make sure that everything is handled according to SEC regulations. All the details on this are clearly provided on the greylockpeak.com website. Also, it's important to note that New Harbor is able to work with U.S. citizens, green card holders, and those with existing assets in the USA. But for regulatory reasons, they aren't able to take on non-U.S. clients. All right, with all that said, if you'd like some insight and guidance on how to protect your wealth during this unprecedented time in the markets, go to greylockpeak.com to schedule your free consultation with the good folks at New Harbor. Thanks for watching.